Alright, what's up you guys? This is Janos with Trading Spies. Today we had a great day on the market. The market was heading up. It seems like an unstoppable train, right? We traded 3 times today, 3 winners, nice trades, waiting for the pullback as we're supposed to do on a trending market, right? That market trending one direction, we're waiting for the pullback, and then we enter, and usually we target at that time the high of day, right? Because we just don't want to get caught up on a big row candles, and as unfortunately every day it's happening. Right now, today it's happened, but luckily it was always to the direction as the market was heading. So today it was a very easy day to trade, right? So let's get in. Let me break down the trades for you guys. And as always, if you guys like these videos, like the content of my channel, please don't forget to hit the like and subscribe button and turn your notification in. And just let's get in and let's get started. All right, let's get started with the trade recap for today. As I mentioned, we had a perfect day, 100% execution, which is always welcome, right? But tell you the truth, today it was, to me, a completely unexpected day. And especially as the day ended, we had closely a 10-point move on SPY, which is a big move, especially yesterday with the Fed meeting. Yes, they announced the pausing of the rate hikes, but also they suggested it's 2 more quarter-point rate hikes coming. So as initially the market dropped yesterday, it completely recovered, but still it wasn't expected this runaway train move, right? But as always, we just have to trade what the market gives. So we cannot have bias. Well, yes, we can have bias, but that's not usually it's not leading to the good outcome, because then we can get stubborn with our ideas, and we just not going to see what the chart showing us and just go with the flow. Today we took our first trade at 10:21 and exited at 10:28, 27 and 28. So we entered 19, 20, 21, exited 27 and 28. All right, so the thesis behind the entries, we created a high of day. We have our nice size pull back to the support. Then we started to move higher. Basically, I didn't took the first candle make a new low, but I took the second one, and right away it started to move very, very nicely to my favor. We had another pullback. We never break our initial support level, which would be the exit of our move. We have another very, very nice move up as we broke our pivot level. I exit half of my position, and as we broke the high of the day, I exited the second half. It was a very, very nice trade. In this trade, I took the 439 calls, right? I entered at 106. The first half I exited 119, and the second half I exited 133. So it was a beautiful trade, closely 25%. Any day we can take these trades, beautiful trades. The second trade, I entered 41, exited 43, 45. So the second one, the exit, this basically another pullback. We had another pivot line right here, right? So this pivot line, we can take that as a support also. So as we pull down, we moved higher, first candle, make a new high, entered into the trade, and our exit were 44. This is this candle and 45 as we moved higher. In this one, I entered exactly the same 439 contracts, entered at 89. Entered at 85, exited first half 99, second half 104. So this one also closely a 20% move. So two beautiful trades. And in this case, I could have let it run to our target, as this is our new high of day, right? So we could have let it run either the previous one, because this was just a week, to get up here. Yes, I left a lot of money because at this point was no indication whatsoever to exit. We could have put a trailing stop, or we just following as the candles make a new low, right? So even if we break, we could have exited at our target level, or if we just want to see to run further up, then as the first candle make a new low, we just exit out of it. Usually I like to sell into strength as it moves instead of pulling back, and the reason why, because we can see this big candle, right? Usually when you break the candle low, the moves are sudden. So this particular move, this sudden move, it could mean an easy 20%, 30% drop from the high. So it's basically whichever is work for you guys. I'm just telling you what this works for me. As we move into strength, that's how I usually like to sell. And the third and final entry, this was just a little bit later in the day, 11:18, and this basically a retest of the previous high, right? We broke out, we pull back, retest. As soon as we reach, I entered, and in this case I didn't have patience because it was moving, but as we can see, it's not much of a movement, and it started to chop around. It took, a few candles to reach the same level and didn't want to break through, so I decided to exit out of the trade. And yeah, you guys can say, but why? Because at this point you don't know if this is going to be the final high of the day, right? So you better, in my point of view, to take profit and then see what will happen if it's give us an opportunity to exit or enter. So either way, it didn't break through. It took 4 or 5 minutes to chop around over here, so I decided to exit at 21 right before it turned to the 22 candle, and that also basically just broke our average high of day, not counting the week, and then basically I exited, and this little move over here gave us a little bit less than 10%. So this was our 3 trades, 3 very, very nice trade. And then from that point we had a consolidation right in the 440 441 area, and then from here just exploded, right? And these in the contract prices, let me tell you, this move from here, and these are the 40, or this is the SPX contract, so let me just go to the SPY. Okay, so we have our contracts up. So basically this breakout, this is a 2.5 point breakout, but in the 441 contracts, if you dare to hold it for the run, it really beside this pullback, really you had no reason to exit out of the move. You could have hold it, set your exit to the pivot levels instead of trailing the candles, because this would have stopped you out, and this would be a very short pullback in my point of view to justify a new re-entry. And this move from down here from $1 to $3, it's a very, very nice move. So basically if you bought 10 contracts and exited on top, or even when it was pulling back, you made about $1,500, which is a very, very nice move. And then we had a little chop around, and on the very, very end, obviously and understandably, a little bit of sell-off, and now we're just consolidating on that level. And from this point on, it's going to be really, really interesting how the market is react, right? Because in the past few weeks, fundamentally the market run away, in my point of view, get very, very extended, because the fundamental data and what was already priced in didn't change significantly, and to me it doesn't justifying a move like this. And that's why we have to always trade the charts, not what is our idea. We can get prepared, but always you guys just trade the charts, whatever the market gives day by day. Put your stop losses, prepare for the pullbacks or the sudden drops so you can get out of the market, because anytime you can get an entry, a new entry, and the possibility to make money, right? Because if your plan it's profitable and nice percentage win, you always gonna end up more money what you're losing if you properly placing your stop losses and you don't let one trade ruin your account, right? So again, that's it for now, and tomorrow it's gonna be a new day, and see you guys tomorrow.